Oliver Sloup is joining us now. He's with Blue Line Futures in Chicago. Oliver, the market seems to have pretty stout, steady footing here this morning to the upside, but do you think that can hold ahead of the holiday break coming up on Thursday? Because you get in a thin market like this and you need to be prepared for about anything, don't you?
Absolutely right. And we're seeing some strength to start the week, and the bulls are hopeful that we can continue to see this momentum build into the holiday break. Obviously, the markets are closed on Thursday. And then Friday's interesting, too, because we have December options expiration. And December options expiration is a big one, especially for December corn, and could play a little bit of a role in price action in the back half of the week, despite it being a holiday week. As you've mentioned, we could get some volatility. Oftentimes during the holiday week, you get a thinner trade. Less trade participation makes it easier to move the market. So I wouldn't count anything out ahead of Thanksgiving and post-Thanksgiving as far as volatility goes. Now, the thing that we've been looking at here over the last couple sessions is the constructive setup that we're seeing on the chart with the soybean market. Sure, we were lower on Thursday and Friday, but we didn't have a complete failure, and January beans still finished the week up 19 cents. So it's forming a little bit of a bull flag and could be setting up for another move to the upside to get us back above that psychologically significant $13 handle. The big support pocket that the bulls wanted to defend comes in between 1260 and 1265. So long as they can defend that, I think they have the upper hand here in the chart as we head towards the end of the year.
Oliver, I was reading this morning where some analysts are getting a little more concerned again about Argentina drying out, and they're early in their soybean growing season right now. I know Brazil has largely gotten the rain that they needed, but we need about every bushel we can get, don't we?
Yeah, absolutely. And we've seen a lot of those headlines too, and we're taking it with a little bit of a grain of salt. I don't see any huge caution flags just yet that's really going to set this market on fire. But as you'd mentioned, if that persists and becomes a bigger issue, that could be the fundamental catalyst to give us this technical breakout and get managed money back aggressively long. Right now, they're not that long at all. I think they're net long about 30,000 contracts. And take that in comparison to where they stand on the corn market, managed money's long about 340,000 contracts. So if we do get a fundamental catalyst, that being potentially weather in South America, these funds could get excited and start adding to their net long position, which is very small at the moment in this soybean complex.